Hi guys, still here in Singapore. This is part 2 of our video series with Jess Uy, the global fund management expert. So while we were talking about the videos of what we were supposed to discuss or talk about, he mentioned something very interesting kasi I was asking, oh, anong interesting na fund that the investors can actually invest into. I'll put a link below, no, so if you want to get to know more about Jess as well and the funds that he is involved with, you can just click on the link as well. But he mentioned something very interesting. He told me, Marvin, in 5 years time, I'm predicting that there will be a global recession. So when he said that, I'm like, whoa, that's an interesting topic to discuss, and that's what we are discussing right now. So Jess, why do you think we will be having a global recession in 5 years?
Okay, this is not set in stone, okay? Because nobody, nobody can predict the market. Things can go, haywire. Things can go in different directions. But this is more of a probability. There's a high probability that we are gonna get into a recession sometime in the next 3 to 5 years. Okay, that's my projection. Primarily because we've been rallying in the equity market since 2009, so that's almost 10 years already. By next year, it's already 10 years. Usually in a 10 years time frame, there's usually a big crash happening. And the equity rally has been running for so long now, so it has to reset sometime. When it will happen, I don't know exactly, but I'm just saying that it could happen in the next 3 to 5 years. The economies are doing very well, as we know that global economies, US is doing very well. When you get into a time when the economies are doing very well, there will always be a time that it will go back. It's a business cycle, so it has to go down again. And siguro when the interest rates go up significantly already, that's when the time that probably the stock market will drop, the economies will suffer, but probably not right away. We'll have to take a look what's gonna happen in the market and adjust accordingly.
Are there any signs as of May 2018? Are there any signs right now leading to a possibility that we may see a crash?
I think it's too early to have a crash, but anything can happen. But I think it's too early. I mean, there's several catalysts that could trigger it, but some of them they're disappearing already. I mean, the North Korea one is already, they already have a peace deal.
Okay.
Diba? And then a few years ago, I think a year or two ago, we were talking about some banks, European banks that that might get into trouble. But until now, nothing happened, and the economies are still doing well. So my take is that it's good to have some assets in defensive stuff, asset classes, but it doesn't mean that the equity market will not rally. In fact, sometimes when the interest rates go up, it can also mean that the economies are doing very well. And when the economies are doing very well, that means companies are making money and all that. So that means the stock market also do well, diba? So we'll see. I mean, there's still other things that can happen.
So is there? Oh, yun, is the trade war like a signal for something that may happen in the future?
Well, kasi a lot of these are speculation, eh. I mean, there's a possibility of a trade war, but whether it happens or not, we don't know, right? They might come out with some solution when US and China talk soon. So once that solution is hammered out, then equity market goes back up again, diba? So ang tanong ngayon is that what kind of investor are you? If you're gonna be, okay, for me it's very simple. If you believe that the market, the global market is growing, the middle class is growing in the next 10-20 years, technically all these recessions are nothing. This will be forgotten. Most likely those people who invested in 2009 already forgot about what happened in 2008, diba? Kasi they already made a lot of money, diba? Pero in a bigger scheme of things, if you're able to hold on through a very long time period, The recessions are actually a good time for you to add to your positions and buy some more good quality equities or stock market, equity fund, you know, those type of things, no?
So
Or other asset class, whether in property.
you mentioned that possibility for the recession is because we've been in a almost 10-year bull run already.
Yeah.
Then there are risks in the table. However, North Korea is out there already because of the peace deal they're trying to
Yeah.
make. Then the trade war, there's no it's still not, it hasn't really happened yet. It hasn't materialized yet. Are there anything that people should at least look out for na, pag nangyari to, like for example sa US 2008, one of the biggest triggers there was a large mass default of property investments there, then which led to a lot of those derivatives hedged into that triggered it. Sa ngayon, is there anything that, sige, I'll watch out for this 1, 2, 3, when I see this start to happen, there's a possibility that a recession may happen already?
I think it's very difficult to speculate. There's really a lot of things, no? And sometimes these things that we speculate on may not even happen. So for me, I think probably if the interest rates go up so much higher than what people can absorb.
What is high? What's a particular interest rate that you think na
Probably,
when it hits this level, ano na yan, sobra
okay,
na to?
I'm talking about the US. So probably if the US hits like 4, 5, or 6%. But right now it's still far. It's still around close to 3. And if it doesn't really reach that range, I think the run will just continue because companies are doing well. They can absorb the interest rate impact. Actually, a lot of companies are making a lot of money. Apple even just made money. Just announced that they beat the analyst estimates again, no? So it's actually like the stock market is going down, but Apple stock is going up.
Yeah.
So,
here's another question from what you answered, no?
Yeah.
What will cost the US government naman to raise it? Why would they have to raise it to 4, 5, 6% also?
to fight inflation.
Okay.
Yeah, because syempre if the value of your money diminishes once inflation goes up, so to counter that, they will increase the interest rate so you can get more money.
But is inflation that how do I put this? Is inflation that big of a problem already for them that they should actually consider from 3% to 6%? That's doubling interest rates already.
Not yet. So ang ano dito is that I think the best path forward is really to increase the interest rate slowly.
Okay.
I think the problem is when they increase the interest rates very fast. That's where I think there will be it will impact the economies na. Kasi if you increase the interest rate slowly and it's planned and it's communicated like what's happening right now, businesses can plan for it, and people can plan for it. So when they buy a property, they know that interest rates go up, they will factor it into their budget. Same thing when businesses expand, they factor in the higher interest rate. The problem is when the central bank starts to fight inflation and the inflation is already going so fast, so they have to increase interest rates very fast to fight it. Now when they increase interest rates very fast, then there's gonna be an issue because those people with mortgages, those people with who borrowed those businesses who borrowed a lot of money, basically they have to find a way to still service those mortgage or their payments, no?
Okay.
So yeah, that could definitely impact how businesses are run. So like for example, what happened in 2008, we always say that normally for uncertainties, recessions, normally the safe haven assets will do well, no? Like gold, for example. But in 2008, actually, the gold mining funds didn't do very well, even if gold prices went up. So a lot of people were asking, how is this possible? And the reason behind that was because there was a financial crisis, right, in 2008. So the banks were trying to collect as much money from all the clients. So the problem was with the mining industry and a lot of different industries, not just the mining, but these industries are capital intensive, and so even if there's something to be mined, they cannot take advantage of the price. They cannot actually mine because they're still paying the bank for all the mortgage and all the loans that mature that the bank doesn't want to renew.
Okay.
Yeah.
Do you see that happening right now? Is there a possibility of that happening in 2018?
I think 2018 I think is probably low. We're probably gonna have some volatility. If there's gonna be a recession, I think at the least probably 2 to 3 years. Maybe even extend to 5, depends on how they manage the economies. But I think 2018 is too early to be in a recession. Probably just some corrections and maybe sideways movement before we decide which direction we're gonna go.
All right, so that's it. I guess those are principles for you to look out for. Now, should it happen in the next few years, you are not caught off guard. But please remember this: markets cannot go up forever. What goes up, there will come a point in time also where people who positioned early will need and want to take profits. As they take profits, of course, more sellers will bring the prices down. So please remember this: it's not a question whether a market will drop. It's only a question of when. And Jess Uy is saying that based on these parameters, should this happen, there may be a possibility of it happening. But then again, of course, no one has a crystal ball to accurately forecast what specific day or time. This is something just to, I guess, warn you, keep you grounded also, that markets don't go up forever.
Yes.
So that's it for now from Singapore. Stay tuned for part 3 of this video with Jess Uy. I hope this video helps you trade well, trade strong, trade smart. See you all again soon.
Ayos.